Atul, we have been the worst performing market this year. Facts. You can argue that over a 20-year period, we've been the best performing market. You could argue that from 2020, if you look at things, we are among the best performing market. This year, it's never happened in 30 years that we have underperformed MSCI Asia X Japan by 20%. We have done that this year. And that's reflected in the flows that you track. What's going wrong? Where are these flows headed? What's your study saying?
As I said, that we ran up to new highs in September, exactly a year ago. In fact, the new high happened exactly a year ago, last week of September 24. So the index is where it was. Post that, we had a fall to 22,000 Nifty. That was the first hit. I think that was a time when people suddenly started realizing that earnings is not what is being priced in. And that whole argument that FI selling came in, we are overvalued, etc. came in. So we had a very big sharp drift, and the world was doing pretty good at that stage. Then we tried to recover. Then we had the India-Pakistan border and the market gap down. We took a second hit. Then again, as the world continued to rally, we again attempted. And now we've had this tariff issue. So we've had three very big hits as far as the index goes. If you compare this with the world, as you rightly pointed out, is about 20% higher, MSCI Global Index. Let's not factor in some more interesting markets. A lot of the European markets, you'll find that they have done phenomenally, decadal best. So India, in that sense, has had almost a dip, a second attempt, and now it's struggling to make new lifetime highs, which you just spoke about. So I guess that's the kind of environment that there is. FII selling is constant. But I think the moot point is, which the earlier two speakers also spoke about, that the basic thing is that till earnings do not come, we do not have the legs to make new highs. Absolutely. Even if we make new highs, it will not sustain. You can have false breakouts, right? Why are some false breakouts? Why do some succeed? Ultimately, it is earnings. Just as in a case of a stock. And that is why this whole GST reforms is very interesting and timely. As you know, you asked earlier that the last time there were corporate tax cuts, it was a mathematical number. It's straight off. It had to be factored in EPS growth, post-tax. But now we do not know. Yes, the reforms look good. Yes, it has to deliver. But will it pan out? And this is going to take time. So I feel that is definitely the silver lining. If this propels that earning growth, then I guess India has a very big catch-up to do.
Absolutely.
In fact, I foresee that we could have a 20% up move in our markets. A 20%, that will be 30,000 Nifty.
In next 1 year?
Yes. Provided these reforms, and there are more in the pipeline, actually play out, and India as a country starts seeing that uptick in GDP growth, corporate earnings and things like that. So India has a very big catch-up to do. We've actually struggled and underperformed. And, just progressing from where you are, if you look at global markets, it is crazy. It is insane.
Especially
the kind of rally.
If you look at NASDAQ, for example, and the kind of listed
anything
stocks.
To do with AI.
Yeah.
You look at, stocks, of course, we all know of NVIDIA. Look at a stock called Palantir. You will spin. You look at countries like Japan, which have not made new highs for decades. But when you go into the Japanese market and you see what's driving Japan, it's not those old Nissan, etc. They are the AI plays.
It's AI play.
Go to Korea. Go to Taiwan. So you realize that, as Utpal said, that there is a new theme emerging. In fact, what I am seeing, even in our markets, Anuj, there are very dramatic new themes emerging. We are still stuck with that HDFC, TCS, Infosys, Reliance. They've done nothing for 5 years. But look at what Eternal has done.
Yeah.
It's created record from listing day to index.
Absolutely.
I think it's been the fastest journey. So I feel that there are a lot of things happening. But ultimately, markets are slaves of earnings.
Absolutely.